So welcome back. We are now discussing June 2022 CA Foundation Principles and Practice of Accounting paper. In the past, we've done question number 1, 2, 3, 4, and 5. And in this part 4 video, we'll be now solving question number 6. Please do watch all other videos which are in the playlist in this very YouTube channel what you're watching and come back for question number 6. Now, there we go. Question number 6. This is from the company accounts chapter based out on issue of shares. I think this has something similar to, or say, over subscription, under subscription with calls in advance, calls in arrears. Let's quickly read the question. A Limited issued 20,000 equity shares of rupees 10 each at a premium of 10%, payable on application. So, rupees 2 on application, 4 on allotment. 4 on allotment includes premium of rupees 1. So basically 3 rupees towards nominal value, 1 rupees towards premium, and 2 on first call and balance on final call. So 2 plus 3 plus 2, that's come down to 7 rupees. So balance 3 rupees will be on final call. All the shares are fully subscribed. Mr. M who held 2000 shares paid full remaining amount on first call itself. So there is calls in advance. There is no under subscription, there is no over subscription. But on first call, you also receive the final call money. This is for 2000 shares which were held by Mr. M. Done. Then the question says after 4 months of first call and fully paid except a shareholder, final call is made after 4 months. So basically for that calls in advance of Mr. M, we need to provide interest for 4 months. 2000 into that 3 rupees final call money, and on that we need to provide interest on calls in advance. How much? 12%. For how many months? 4 months. Everyone paid except a shareholder of 200 shares and one another shareholder having 100 shares. So one shareholder having 200 shares and one more shareholder having 100 shares didn't pay. Very good. They paid their due after 3 months and 4 months respectively. So there is calls in arrears on the final call, calls in advance on first call. Calls in advance on first call is for 2000 shares. Calls in and it's for 4 months, interest at 12%. Calls in arrears is for 200 shares and 100 shares. 200 shares money is outstanding for 3 months, 100 shares money is outstanding for 4 months. So this 200 into 3 will be computing interest for 3 months at 10%, and 100 shares into 3 will be computing interest for 4 months at 10%. That is interest on calls in arrears. And interest on calls in, along with interest on calls in arrears will be paid. Company also paid interest on calls in advance to Mr. M. We know that. The company maintains calls in arrears and calls in advance account, which they should definitely be doing. Very good, they've done it correctly. Give journal entries to record these transactions. Easy. Let's start writing accounting entries for this case. Shall we? Fantastic. Come on. In the books of A Limited, journal entries for issue of shares. At first, the entry is for receipt of share application money, for which will debit bank account. The money will be received and it will be transferred to share application account. This is being share application money received on how many applications? On 20,000 applications. And this is computed as per application we are collecting rupees 2. So I'll do 20,000 into 2. 20,000 applications into 2 rupees per application, that comes to 40,000. This application money, whatever I've collected, I'll post this from my share application account to share capital. Whenever I post this money from share application account debit to share capital account, the journal entry will be share application account debit to share capital, for which I'm going to write the entry as share application account debit to share capital account. It is at entire same money, 40,000, 40,000. Yeah, because there is no over subscription, there is no under subscription. Being share applications accepted and transferring the share application money to share capital. Dates are not there. You would love this part. I know it. And on allotment, we're receiving 4 rupees, including premium of rupees 1. So first we'll write the entry for due of allotment money, which is share allotment account debit to share capital. And whenever we write the due entry, that is when we need to write the premium entry. Premium will not go to share capital account, so it has to be credited to share premium account. On 20,000 applications, 3 rupees is the money that is supposed to be collected, and plus over and above that 1 rupee, sorry, 4 rupees is to be collected, 3 rupees is towards allotment, 1 rupee is towards premium. So totally 4 rupees, that comes to 80,000. Out of this, 3 rupees is towards nominal value, 20,000 into 3 will be credited to share capital account, and 20,000 into 1 that will be credited to share premium account. So this is being amount receivable on share allotment alongside with premium. Done. For this, we need to write an entry or receipt which is duly received. There is no problem. And calls in advance of Mr. M is coming in first call. So allotment mein everything is fantastic, fine, and nothing new. I'll write bank account debit to share allotment account. The same amount of 80,000 is correctly received, nothing wrong there. Being share allotment money received along with share premium. Then let's write the entry for first call. First call money is rupees 2 per call and this is due on 20,000 shares. The due entry will be same, but on the receipt alongside with 20,000 share first call money for 2,000 shares held by Mr. M, we're going to receive the second call money also. So let me write the entry here. Share first call account debit to share capital. This is for 20,000 shares into 2 per share, 40/40. This is share call money due. And when we write bank account debit here, whenever we write bank account debit here, we're going to credit share first call. But this time we're not just receiving the share first call money, we're receiving some extra money from Mr. M towards calls in advance. This 40,000 is something simple that 20,000 shares into 2 per share. But Mr. M, who holds 2,000 shares, has paid full remaining money in first call itself. So 2 plus 3, 3 on allotment, 5 rupees, plus 2, 7 rupees on first call. So 3 rupees is due on second call, which is already paid by Mr. M. So one who holds 2,000 shares has paid 3 rupees per share, and this second call money what is paid is calls in advance. So totally what I have received is 46,000. That is including the share first call money. Being share call money received and calls in advance recorded. Great. Now going ahead. After writing this share first call account, now we're going to make share final call. This final call is happening after 4 months, but that's okay. Let's make final call. The entry for final call is due entry, share final call to share capital. This will be for the balance of 3 rupees for 20,000 shares. 20,000 into 3, 60,000. 20,000 into 3, 60,000. This is amount receivable on share final call. When we go to write entry for bank, we will not just be writing bank to share final call. We will be writing some money which is not received from two of the shareholders holding 100 and 200 shares to calls in arrears, and the money what is received in advance, that is calls in advance account. Do you guys get this? Bank account debit, calls in advance account debit, calls in arrears account debit to share final call account. This is sorry. Being share final call money you received and adjusted. I'll write the entry here. Being share money received due and advance adjusted or accounted. Now, we will not receive the entire 60,000 right now. Some money will be received later, some money is already received. How much is already received? Calls in advance is very simple to identify here. Mr. M, who was supposed to pay us 2,000 shares ke liye 3 rupees, has already paid this money along with our first call. So, that 6,000 rupees is our calls in advance account. Share final call obviously those 60,000. And certain shareholders who are holding 100 shares and 200 shares have failed to pay money. So I will write here 100 plus 200, basically 300 shares into 3 rupees per share I will not receive. That is 900. And what is received is balance 60,000 minus 6,900. Yeah, 20,000 shares mein 2,000 received in advance, 300 received in arrears. So if we deduct 2,300, what am I left with? I'm left with 17,700. Those 17,700 shares into 3 per share is what we receive now. 53,100. Done. And now we need to pay interest on calls in advance and receive interest on calls in arrears. First, let's write the entry for receipt of money. So we're going to receive money later. I'll write bank account debit to interest on calls in arrears. How much are we receiving as interest on calls in arrears? We're receiving calls money as well as calls in arrears money. Calls money is 900. Okay, no. There are two cases. First, you'll receive on 200 shares, that is at the end of 3 months. Then you'll receive on 100 shares at the end of 4 months. So first, let me write for those 200 shares into 3, 600. This 200 shares, may 3 rupees per share was due for 3 months. So I'll write 600 into 3 months, 3 months, right? 3 months into 10%. Yeah, this is what 15 rupees. Totally I receive 615. Interest on calls in arrears being income, we have credited it, and 600 rupees being the arrears money, which was an asset which is now received. I'll credit it, and bank account debit because the money is now received. Then, yeah, next entry will be for the balance of calls in arrears received, for which the entry is bank account debit, 2 calls in arrears, 2 interest on calls in arrears. This is for that balance 100 shares. You get that? So arrears were 100 shares into 3 per share, that is 300. Interest is 300 rupees into 10% into 4 by 12, 4 months, that is 10 rupees. And the bank account debit will be 300. You guys get that? Now we'll write entry for interest on calls in advance what we pay. Interest on calls in advance account debit to bank account. This is with regard to those 2000 into 3, 2000 shares into 3 per share, 6000 rupees. On that 6000 rupees, we need to pay interest at 12% for a period of 4 months. That is a period for which the calls in advance money was there with us. That is a time gap between first call and final call. I'll do 6000 into 12% into 4 by 12, that is 240, 240. I'll write here being interest on calls in advance paid. Got that, guys? So 240, 240, that my friends is the accounting entry. I hope you all understood this part, and this is solution to question number 6a. We are now left with only one teeny tiny question. It's actually teeny tiny because of the fact that they've told what is petty cash book and write any two advantages. What to? I'll write all of them that's there in the material. Petty cash book is a form of cash book which is recorded, which comprises of all small payments like cartage, coolie, postage, and courier, etc. This is prepared to ensure that we save the time of the main cashier and burden of the main cashier to have better time control and what to say management of cash, isn't it? It saves time, it saves labor, and it controls over small and tracks small payments. This, my friends, is the objectives of petty cash book. I've been questioning this often in the class also. I ask students, tell me what is the advantage of petty cash book? What is the advantage of subsidiary books? At sometimes you might feel that why the hell is sir torching us like this? But the reason is pretty simple, guys. Questions like this come up for 4 marks, 5 marks in the examination, which is definitely a cakewalk. And provided that you people are able to answer it in the class, you have no reason why not to write it in the examination. And nothing's waiting there to stop you from getting those 5 important marks which can take you from CA foundation to CA intermediate, sometimes with distinction. This is solution discussion to June 2022 examination paper, and I hope your November 2022 examinations, which will now be happening in the month of December 2022, will go really great. Exams timetable are expected sometime this week or 10 days. Exam forms also will be out. Please do fill your examination form on time. Don't wait for the last day, and please do enroll for the examination and prepare really well, and stay tuned for videos on RTP discussion for December 2022, that is November 2022 examination, which is going to come about in this very YouTube channel very shortly. And this hour of the day, please do mark it, 10 p.m. or 9 p.m. I'm going to make a lot of content. It's going to come around this night time, so we're going to spend a lot of nights together on YouTube here. That's it, guys. Remember, life is not a battle to be struggling. It's a game to be enjoyed. Till the time you're learning something, you're having fun. It's all good. The day you guys either stop learning something new or stop having fun, trust me, you might start struggling because you might be in a battle. So the thumb rule to stay happy is pretty simple. It is to stay in the game. So for one last time on this day, I have just one simple question for all of you. It is, are we in the game? I hope the answer is yes, we are in the game. See you all in the next video. Till then, stay in the game.